A considerable jump in air traffic and moderation in jet fuel prices have failed to turn around the fortunes of SpiceJet, which continue to remain in the red. In January, domestic airlines carried 64 lakh passengers, and the numbers jumped to 6.7 crore in July. During the same period, SpiceJet's domestic market share came down from 10.65% to 8%, which meant the airline slipped from number 2 to number 5 in ranking in a matter of 6 months. The company delayed its Q4 FY22 results after witnessing a ransomware attack on May 25th. SpiceJet on Wednesday reported a Q4 loss of 458 crore rupees and a loss of 789 crore rupees in the April to June period, the first quarter of FY23, due to high fuel prices and a depreciating rupee. The first quarter total revenue more than doubled to 2,478 crore rupees. Meanwhile, the overall loss incurred in FY22 was 1,725 crore rupees, a jump of 73% over FY21. To make matters worse, its chief financial officer Sanjeev Taneja, who took charge in November 2020, resigned with immediate effect on Wednesday. SpiceJet said a replacement has been found. Markets took the cue. The Gurugram-based airline's shares fell as much as 15% on Thursday. So far this year, the stock is down 33%. The cash-strapped airline has been struggling to make timely payments to vendors and lessors, which has led to the aviation regulator DGCA deregistering 6 Boeing 737 aircraft in August. Its employees on Wednesday alleged a delay in the dispersal of salaries for the second straight month, with the airline saying the payments were being made in graded format. In July, DGCA ordered SpiceJet to slash its approved fleet to 50% this summer for 8 weeks in the wake of several mid-air safety snags. The regulator said that it would subject the airline to enhanced surveillance. In a show cause notice, DGCA has said the airline failed to build safe, efficient and reliable air services. As of March 31st, SpiceJet had a negative net worth of 4,288 crore rupees and negative retained earnings or accumulated losses of 5,913 crore rupees. Its current liabilities exceeded its current assets by 6,408 crore rupees. Its cash and cash equivalents at the end of FY22 stood at 9.6 crore rupees, while bank balances were 50.7 crore rupees. Managing Director Ajay Singh said despite the complex operating environment and highest ever input costs, the airline had been able to sustain its operations and would soon engage investment banks to raise up to $200 million or about 1,590 crore rupees. But will this be enough?
Given the way the situation is with SpiceJet, there is no other option but to raise equity. That is the first step. The kind of debt that he has, if any bank has to give any further more credits or debts, they would need an equity infusion to come into place. Number 3, you have to understand that the airline still has aircraft on orders. So when you're looking at the equity infusion, and there are a lot of hedge fund or there are large funds which do look at such kind of opportunity. This is like an opportunistic investment. A significant part of that return on the investment is actually going to come from the future aircraft orders and the sale and lease back and the capital gains that they get on those aircraft type. I think they would really need to look at $300 million kind of a number. The only value now in SpiceJet is not the slots, not their traffic. The only value left in that airline is the future aircraft that they're supposed to get on the Boeing 737. And for them to lock that value, they need to make the PDP payments on time. So keeping those PDP payments in place, I'm sure that number would be close to about 300 million that they would have to really look at. The airline has deferred a lot of their payments in COVID. So they've not paid their lessors, they've not paid airports, they've not paid maintenance organizations. Yeah. They've deferred all those payments. Now, a lot of these vendors would have been okay as long as the airline was not operating to its full limit. But now the minute the airline starts operating in full limit, you have to understand that all these companies are waiting to get themselves paid. Your cash inflow still is probably in the same line as what a normal operational cash flow should have been, but your cash outflow is about 80-90% higher.
In short, Ajay Singh needs a white knight. Given SpiceJet's current market capitalization of about 2,700 crore rupees, any fundraising can cause significant dilutions for existing shareholders, including Singh, who holds a 59% stake. But this can be avoided by structuring the infusion such that he retains control after onboarding the financial investors. Unless he can convince new investors that he is the right man again to steer the turnaround, he may not come out unscathed.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.